Well, welcome back to Talking Money. Hannah, lovely to have you here again. And we've got three hot money topics to talk about this week. We're going to kick off with the housing market boom, which might just be coming to an end after the amazing run it had last year. So what data are we seeing that suggests that things may not be quite so rosy in the housing market?
Well, there's two sets of data, really. One that came out actually today, merely hours before this podcast, that is contradictory, but I'll tell you why. And then quite recent data, it's from the weekend, it came out from Rightmove. And Rightmove are suggesting that house prices are dropping by about £3,000 thereabouts. And the reason Rightmove are giving this suggestion that this is happening is because the stamp duty holiday, that nice thing that a lot of people have been taking advantage of, ends at the end of March. So what's happening is sellers are going, oh God, we need to sell. We need to take advantage of this holiday, get the money off stamp duty. Let's lower the price of the house, make it more marketable, sell it, get the stamp duty out of the way. Unfortunately, this isn't necessarily the best strategy because the chances are by the time that you've gone through the process, even if your house is, already listed and you're already at that stage, you're probably now not going to be able to get in ahead of the stamp duty cut. So it's not necessarily the best move to suddenly cheapen your house.
No, I think you're absolutely right on that. I mean, I've bought and sold a few properties in my time, and the conveyancing process at the best of times takes a long time, and it's very frustrating and slow. But now, from what I hear from local estate agents I speak to, it's an incredibly slow process. So because conveyancers are not in their offices, they're working remotely, that's slowing things down. Again, with the local authorities and their records departments, they're not necessarily in the office available to access their systems. And then you've got this thing going on in the background, which is very important for a lot of people, which is this flammable cladding issue. I understand that's taken up a huge amount of resource when it comes to local authority conveyancing teams and also solicitors. So even if you got somebody offered you money for your house today because you dropped your asking price, you made it really attractive, there's no way you're going to beat the end of March deadline, even with a fair wind.
No, and so I really don't think it's a good idea for people to suddenly be kind of lowering their house prices and then possibly have a double hit of cheaper house and stamp duty to have to pay. That doesn't seem that great of an outcome. The second piece of kind of research that came out today was actually from the ONS, and it was house prices. And the reason I say that this is going to be contradictory is because this is it's more thorough research, and as a result, it comes out later. So research from November was actually showing that house prices were through the roof. So what's happened is very, very quickly in November, you've had very high house prices, obviously having been pushed up by the stamp duty holiday, which anyone could have told you was going to happen back when Rishi Sunak made the announcement, and has kind of done this in a few months. It's gone down. And it looks like, again, according to Rightmove and various estate agents are coming out with different figures. Some say it's going to kind of go down about 1%. Some say we're looking at maybe even a 5% drop next year in housing prices, which is great news for some of us after the stamp duty holiday pushed house prices up, but obviously not ideal for people that were maybe hoping to maybe make a quick purchase, hopefully try and do it up, sell it the next year. It means less of a profit for them.
That contrast between the numbers we're seeing from Rightmove and the numbers you see from the ONS, that's quite an interesting contrast because it's about lagging indicators and leading indicators, and official ONS figures, official house price sale data, that's always going to be lagging. It's always going to be out of date by the time we hear about it, a bit like inflation, a bit like any sort of economic figures like GDP. But the Rightmove stuff, I think because it's based on asking prices, it's the stuff that's listed on their website right now. That's a leading indicator. It suggests that house prices, when they're sold in 12 weeks time, whatever it might take, that's going to be lower. So both are really useful, both are great to look at. But my expectation is the housing market's going to take a tumble this year for all sorts of factors. Stamp duty holiday coming to an end. That pent-up demand we saw post-pandemic last summer hopefully has worked through the system. It's just going to be tougher times economically. Rising unemployment rates, unemployment's meant to peak in the summer between sort of 6 and 7%. We're not going to see the housing market get carried away unless, and I'll caveat that, unless the Conservatives do what they love to do, which is to stimulate the housing market, because the Tories have got this weird obsession with the property market, haven't they? And we're already hearing speculation, could Rishi Sunak extend the stamp duty holiday in the budget on the 3rd of March? who knows? Who knows what they'll do? They won't want to see, I don't think, they'll want to see the housing market take a tumble just as the high street reopens, just as the economy wants to get back to normal because of confidence. If our house prices are lower and we're thinking, oh goodness, we're losing thousands or tens of thousands of pounds in the value of our house, we're not going to be as prepared to go out there and spend money on the high street.
Now that logic, I totally understand that, but this idea of keeping the housing market so afloat, and it's so overvalued anyway, it's so astonishingly overvalued. The idea that there needed to be a policy that was going to cost the taxpayer billions of pounds. This policy has cost taxpayers about 3.3 billion pounds roughly. The idea that that needed to happen when we could have spent that money in such a better way, I think, during a pandemic, is madness to me. Why do you need to keep a market that's already artificially inflated, continuously inflated? We talk constantly about how more and more people can't afford to buy a house, and the housing market is just ridiculous, and it's inflating at crazy percentages compared to other markets. Why on earth did we enact this policy? I mean, it's lovely for people that were kind of managed to get some money off, and I don't blame anybody for using it. My parents have been trying to make use of it. I think if it's there, my God, make use of it. You might as well make some savings. But for everybody else, what a waste of government money. I was so furious when they've done this, and I wonder if they will extend the stamp duty holiday.
Yeah, I mean, it's a possibility. The other thing we may see in the budget is just a reform of stamp duty. So there's a lot of talk at the moment about the work done by the Office for Tax Simplification and looking at things like capital gains tax and trying to reform that to make it a fairer tax. But I'm leaning left with you on this one. I don't normally, but I'm going to lean right over to the left on the political side of things, which is spending all that money, £3.3 billion on a stamp duty holiday. Yet we've got an argument taking place at the moment about the £20 a week uplift to universal credit coming to an end, which is going to really hit the lowest income households. It's going to push relative child poverty through the roof. So that doesn't sit comfortably with me as a natural sort of conservative. It doesn't sit comfortably with me at all. And I think the budget could be very interesting when it comes up in just over a month's time.
I agree, and it's nice to have you on this side.
Just for a bit. I can't promise it'll be a permanent change. Number 2 then is Chad and Jenny. And people watching or listening to this might be thinking, who on earth are Chad and Jenny? I didn't know who they were until a few days ago. I have the app TikTok on my phone. And as a 41-year-old gentleman, I probably shouldn't have the app TikTok on my phone, but I'm fascinated by social media platforms, new social media platforms, how they work, what the opportunities are on them, etc. And they're quite entertaining. You can waste your time scrolling through it. There is a dark side to TikTok. There's lots of dark sides to TikTok, but there's a particularly dark side when it comes to personal finance, money, investing. And this got highlighted on Twitter the other day by a fantastic account called TikTok Investments, I think it is. I'll link to it in the show notes in the description. And they find videos on TikTok where people talk absolute rubbish about investing money. And this one from Chad and Jenny, this couple of influencers from the States, was just beyond rubbish. It was he basically was sharing his investing strategy. He said, what I do is I pick stocks that are going up and I invest in them and I wait till they stop going up and then I sell them and I keep doing that and I make loads of money. And I just couldn't believe what I was hearing. I couldn't work out if it was a parody, but it turned out to be real. And then I took a bit of a deeper dive into it. It turns out there are thousands of these idiots on TikTok sharing really bad money advice. So do you use TikTok, Hannah? Have you looked at this and have you come across these?
I am. I'm sort of a scroller of TikTok. I don't have a TikTok account. I thought it's actually something that caters to my personality so well to actually make TikTok, but I just can't bring myself to do it, which shows that I'm getting old, which is terrifying. But I know exactly what you're talking about, and very occasionally these sort of the algorithm suggests finance and things like that. And there's, I have to say, there's some really good finance TikTok as well out there, and we can talk about that in a second. But the problem with the likes of Chad and Jenny is that, yes, I mean, I guess if only we'd all thought of this before, buy a stock low and sell it high. It's genius. It's what everybody would do if they could, but the problem is that we can't do that. It's not a sensible investment strategy, and it's not sensible to be giving people that might know nothing about money, nothing about investment at all, just buy a stock cheap and sell it high, easy, profit, done. It's a lovely theory, but in reality it's impossible to time markets, and professionals don't know how to do it. And it's not sensible when you could just be buying into a low cost tracker fund if you don't know what you're doing, and make some money that way.
And for me, seeing those videos this week has highlighted two really big issues, probably more than two, but two that come to mind immediately. One is there's lots of brand new investors who have come onto the market since the pandemic started because they're sat at home with nothing else to do. In the case of people in the US, they've got their stimulus checks through and they don't know what to spend it on. And then we're seeing this emergence of low cost or commission free trading platforms, which almost gamify the experience, that make it very, very easy to buy and sell stocks, to make it very engaging. So that's happening on one side. The other side is the really dark side of it, which is the scammers. And what we see, I'm not suggesting for a second that Chad and Jenny are scammers, but what we do see on social media platforms is influencers trying to direct their viewers into scams. And some may be doing it unwittingly, others are definitely doing it intentionally, but they're trying to sell things called trading signals, which is a subscription service you get on something like WhatsApp or Discord, so a private messaging service, and you subscribe to it, and they send you messages each day to say, buy this stock, sell this stock. And I think the idea is basically you follow the person along with their own trading platform, their own trading strategy and tactics. So there's that. And then there's also managed investment offers. So they try and lure you in and they pretend that they've made these wonderful returns, turning $400 into $14,000 in a week. That sort of nonsense doesn't happen, by the way. And they take over your trading account, and then it goes well for a few days, and then you tell your friends and family, oh, this is going really well, you should pile into, and they open accounts with them, and then they disappear and you never hear from them again. And as well as taking all of your money, they've taken your friends and family's money, which is just a horrible position to be in. This is so hard to regulate, and we know financial services is very well regulated here in the UK, but this is online. This is a Chinese social media platform with content producers in America, Canada, Russia, Japan, anywhere in the world, and anyone in the world can watch their content and be suckered in by it because they're selling this really attractive looking lifestyle. And the Chad and Jenny example was van lifers, so they live out the back of a van. It's a very attractive looking lifestyle, but they're talking absolute rot when it comes to how to invest, how to manage your money. Have you seen other examples of this sort of stuff? And you said you've seen some good personal finance examples as well on TikTok, but
I have. I mean, I suppose in the category of bad stuff, there's a lot about crypto on there, an
yeah.
awful lot crypto. Particularly, I ended up when I was obviously I got to do research on TikTok this week for the podcast, which was fantastic, by the way. This was so much fun. But I ended up and going through, scrolling through, and something called Hex was coming up to me all the time, and I think that's a cryptocurrency in the US, and there was literally, it took you through, okay, go on this app, buy this cryptocurrency, go to this website, change this cryptocurrency into Hex. Now do this. Hex is worth this. If it goes up 10%, you're going to make £10,000. And I was sat there and I was trying to follow it through and like Google it as well and see if it was actually legitimate. And I have to say, it's even somebody that in theory should be able to spot scams and should know this stuff relatively well. It's really difficult for me to work out, is this legit? Could you do it? Is it just a risky strategy? And that's fine. You can you're allowed to do that if you want, or is this an actual scam? And I think it's really difficult. On the more positive end, there are people on Money Talk, if you want to call it that, that do really seem to know what they're doing. That they sound like professionals basically, and it's almost like they're trying to educate people in finance, just kind of the stuff we should have been taught in school, but including investment, and essentially saying, if you put some money into one of these kind of very mainstream, ordinary kind of, even a tracker fund, that's it. If you put money into these kind of accounts and you put X amount of money in per week and you leave it for 40 years, by this time it will have done this at standard market rate. And I think that is actually quite useful. And actually I saw one of these videos at the beginning of the year, and I've been meaning to invest money now for probably a good year, actually. And it was just one of these things that I never got round to, because somehow in the year of coronavirus, when I was home most of the time, I always had something better to be doing than sorting out my finances. And I saw actually a TikTok it was literally just talking about tracker funds. That was it. There was nothing more
Mm,
complicated than that. And it was just saying, market tends to make about I think it was 8%, it said, every single year. And if you just put a tenner in every week, you can have it said nearly £1 million or something by the time you're 65 if you started in your early 20s,
mm,
which I'm a little bit dubious of. But the concept behind it of just slowly investing, watching that money build up, leave it alone, do not touch it, but you'll make a greater return than you would
mm.
if you had money sat in cash, I think is a valuable tool to know for a lot of people out there that really have nothing to do with investment, or see investment as it's something for rich people only, or it's something to
Yeah.
do when I'm in my 40s or something like that. So there's definitely an element of educational money TikTok that I think is quite useful. But I totally see how people can be suckered into all these scams. And like you said, the regulation is impossible. I wonder if there is loopholes around social media now being publishers, because I'm
Yeah.
fairly sure when it comes to publishing, if for instance City AM published something, I think we'd have to write a disclaimer. If it was,
Mm.
sponsored content from somebody, I think you have to say, your investment can go up or down, the kind of disclaimer. I wonder if there's something in that that could help to
Yeah,
regulate
no,
TikTok.
absolutely. I mean, if it's UK-based content, then the Financial Services and Markets Act, which is what makes the regulation for financial services in this country, has a media exemption in it. So as long as it is informational and it's not advice, then that's covered by that media exemption. The other one, as you say, sponsored content affiliate links. So I think that's the Advertising Standards Authority. And they're very hot actually on social media influencers who don't disclose sponsored links, affiliate links, etc., or brand deals on their content. So those are the two to watch. I think just my closing thought on this is that there will always be get rich quick schemes out there. This is nothing new in a sense that people are suckered in by this idea of turning a small amount of money into a very large amount of money very quickly without having to do much. It's just human nature. It's one of our sort of fallacies we have. It's never actually going to work, but the platform will keep evolving. And now we've got TikTok, and that's where it is. But this is no different to, I guess, what people would have seen in the 1950s, 1960s with gambling postcards coming through the door and sort of tips on your gambling websites and stuff in the more recent times. So it's not changed. If it seems too good to be true, it is. I think it's a rule of thumb there. Just do your due diligence on these people. If you're going to take money advice or education from someone, don't take it from a couple of people living out the back of a van who have never studied financial qualifications, who have never advised. Look for the financial planners who are on there, and I'm calling for financial planners to join TikTok, to put more genuine content on there to help with this education process, and that might help in time to counter some of the absolute nonsense we see on there. But we'll see. In the
Have
meantime, we
you
get to watch people dance and
And
make
it's
ideas.
fun.
It's loads
It's
of
very
fun. Yeah,
funny as
yeah,
well. Have
yeah.
you got a page yet on TikTok?
I
Have you
have, but I
started yet?
haven't really started creating much content. I put a few sort of trailers for these videos on there. I need to embarrass my daughters and start, making it a bit more creative. I think with stickers and all the rest of it. But yeah, it's the future. I think we can't ignore that social media is such a big part of our lives, and it is where people will increasingly turn for education, for entertainment, for information. So we can't get past that, but we have to watch out for these scammers because they are everywhere. They're absolutely everywhere, and they're taking advantage of a lot of people during the pandemic as well. When we're vulnerable, when we're feeling anxious about the economy, that's when they swoop in and say, well, you might be losing your job, but here, give me £1,000 and I'll turn it into £10,000 for you. And we know it's a scam deep down, but sometimes we get tricked. It's too easy. Number 3 on our list this week is HSBC, and the news that HSBC is going to close another 82 branches this year. They're still going to have a few left. I think they're going to have 511 branches left in the UK, but obviously spread around a little bit. Have you still got bank branches locally to you?
Um, yes, some. I don't know which ones, because to be totally honest with you, I use Monzo for
Okay.
almost everything apart from saving ISAs, that sort of thing. So I'm not really somebody that ever goes into a high street bank. I am the reason that this is happening.
Yes, you are.
Because there's, I mean, I, the downside to this, obviously, is for older people or people that are more vulnerable for other reasons, that really could use going to a bank and
Mm.
suddenly find that they're a HSBC customer, suddenly their local branch isn't there anymore. HSBC did say that all but one, I believe, of the bank branches that were closing were within a mile of a post office.
Okay.
My millennial self did not know that you can bank at post
Mm.
offices. I had no idea that was a thing. That's very useful to know, which I assume is helpful. Not that I know anything about this clearly. Um, but I think it's kind of heartbreaking to imagine an older person suddenly not able to just hand in a check or something like that, because I know that's, my grandma gives me checks
Yeah.
every year for Christmas, so that's how people operate still. But at the same time, things must innovate, and
Mm.
clearly there's a huge market for online banking. I'm sure, like we say so often on here, that the pandemic has just it's just made everything move so much faster towards digitization,
Mm.
and this is the next step. And hopefully, if HSBC aren't spending money on the physical sites, they can funnel that money into making the online experience better for absolutely everybody.
Yeah, I mean, I only discovered at the start of the pandemic that I could pay checks into my bank by taking a photo of them with my banking app, and scanning them. I'd never done that before, and at the time, I think the bank branches were closed back in March, April for a little bit. So I still had my local bank branch in the village. It's gone now, by the way, but still had it at the time. And yeah, you can pay a check in now by scanning it up to a certain limit. So you can't put really big checks in that way. I think there's a risk of fraud. But banking apps, I can't really remember the last time I had to visit a bank branch for anything I do, personal or business, because all of our invoicing is now via the internet. I occasionally visit a cash machine. We'll come on to talk a bit about cash in a second, but occasionally I'll visit a cash machine or get cash back in a shop. But there's very little I need to do over the counter. Going back to sort of the people who do lose out, though, and this sort of relates a bit to what we were talking about, scams and things a moment ago, and vulnerability during the pandemic. I do worry that those elderly banking customers who will no longer have contact with bank branch staff, who might spot more easily suspicious transactions. So, an elderly person being convinced to withdraw a large sum of money and then saying, "Oh, it's because this chap came round to look at my roof or something." That interaction being removed, I think, is potentially quite dangerous for more vulnerable customers.
I agree. I mean, I would, if there was a way that you could do both, you could
Mm.
you could have the smaller bank branch that was there and physical for people to use it if they wanted it, completely in the knowledge that there'd be far fewer people going in than there ever had been. That would be a nice compromise. We should say as well, because I don't think either of us have mentioned this yet, nobody's getting made redundant, or
Mm.
very, very, very few people are. I know they're doing their best to move people around, and they're not making redundancies to the best of my knowledge. So at
Mm.
least for anybody listening that's concerned about that, that at least won't happen.
Yeah, and then sort of linked to this is this access to cash report we've seen from Which, the consumer group Which, this week, and finding about a third of people since the pandemic started have actually had cash refused when they've gone into a shop or a business and tried to buy something with cash. So businesses increasingly now saying, "Sorry, we don't take cash anymore." And that's certainly been my experience here locally in Cranleigh. A number of businesses now it is contactless only. So certainly the cafe I go to is now contactless only. There's still a few places, and actually our butchers now has a fantastic sign up saying we still take cash. So they're making a really big point of that, probably for an elderly customer base. But do you still use cash at all, or are you digital and constant? No, no.
No, no, no,
silly,
no, no,
silly
no.
question.
No, I have. I'm not joking. I've got about. There's about £4 coins scattered around my flat. One, weirdly, I know is in the bathroom on the side. I don't know
Of
why. I
course.
must have just put it out of my pocket there. There's a couple actually just by on my windowsill here. And do you know what they call? We call them the Sainsbury's pounds,
Yeah.
because the only reason they exist is that when Ray and I go to Sainsbury's to unlock a trolley,
Mm,
that's the only thing. They never even get spent. That's how
yeah.
useless they
You
are
still
to
go
me.
to the supermarket and use trolleys. See, that's old school to me. So we just have home food delivery now. We don't go shopping
It,
anymore.
it's because of the situation is so dire with food around here in terms of trying to
Ah,
get deliveries. We could do it, but we'd have to be planning like 2 weeks in advance. It's
Yeah.
just ridiculous. It's really difficult. But we have recently discovered Amazon Fresh, which actually is really, really good, and you can get stuff the next day, but it is more
Mm.
limited in capacity. But
Yes. Yeah.
but
It's good.
no, I
Yeah.
never use cash, to come back to your
Just go
original
back to
point.
that. And I think the fear around this is that we're seeing, again, going back to the pandemic accelerating existing trends, that the pandemic is prompting businesses to refuse cash, and therefore we may see the complete death of cash, much sooner than it probably would have happened naturally. I know we're seeing a big withdrawal in terms of, no pun intended, withdrawal from the cash machine network. So there's fewer ATMs available now, and that's again a consequence, I guess, of bank branch closures, because in Cranleigh we had HSBC actually went first, and then NatWest, and then Lloyd's. So we still have Barclays, but they're only open, I think, 4 days, 4 very short days a week, and we've got a very small nationwide concession, and then we've got the post office for the counter services. But when each of those three banks closed in the last couple of years, they withdrew their cash machines. So every time this happens, it just chips away at the cash network and our ability to access cash, and for cash to be the norm rather than the exception, I think, as it's rapidly becoming.
Yeah, I know there has been. I really, really, rarely would go to a cash point, but on the few occasions I have, it might be that the only thing I can remember is actually if I've tried to go to a club or something like that, which shows that clearly it's not been in the last year. And sometimes you had to pay entry, and it's
Mm,
in the form of a £5 or a £10 note, and then I'd have to maybe run around and try and find a local cash point. And I've definitely been drunk in London trying to find a cash point and being having a really hard job. And it's not just because I'm drunk, it's because really there are very you have to walk down several roads in order to get to one. So I absolutely there are fewer of them around. I think around here there's one that I know of that's outside Tesco. Apart from that, I could not tell you where
no,
another
no.
ATM is. I have absolutely no idea.
No. For anyone listening to this conversation or watching us, let us know. Let me know about your experience with cash. Do you still use cash? Are you a sort of contactless? I'm an Apple Pay fan. That's how I pay for most things now. And particularly now the limit's gone up, I think, from 30 to 45 pounds. It's that much easier to buy things, with Apple Pay without even having to get the wallet out the pocket. So let us know in the comments, or drop me an email at usual place. Hannah, thank you for joining us again on Talking Money this week. Great to see you as always, and we'll catch up again next week with 3 more topical personal finance topics to cover and discuss and share our opinions on. But it's great to see you. Thank you.
Thank you very much.